Good morning, everybody, and this is your Dow Jones trade setups for today. So, couple of things here. So, first thing is we see a very slight lower low here from last week, and we have diversions. So, I would be watching that very carefully. The next thing that I would actually pay very close attention to is the Fibonacci, and you're probably not going to see that, so give me a sec. Shows you when last I used it, and we want to do that, and we want them something we can see like black. Okay, so you can see we're just below the 61.8. So this is a zone that we do need to be paying attention to. So a strong move up, strong pullback. If you look at the moving averages and you look at them there, we are in a downtrend on the 8-hour, but if you come to the daily, you can see that's a second range bar pretty much of total confusion in a zone, and this would be a weekly zone as well. And look at the oscillators, one's crossing over, the other one is still there, separated. Big diversions from the previous swing low in and around the 61.8 Fibonacci. This is an ambush zone. So what I mean by that is the bears kind of weren't in control 2 weeks ago. Last week they were very much in control, and this is an area where you would expect the bulls to try and ambush. So in other words, try and trigger stops, because there's going to be stops above these swing highs here as the bears try and get this thing moving to the downside. So going to be quite volatile. You can see there now the swing low is quite clear. You can see the diversion is quite clear as well. Trend is down, no doubt about that, but this zone that we're in between 34,494 and 34,300 is a massive daily and weekly area of support. So I would be very, very cautious trying to look for shorts there. At the moment, looking at the hour, trend is still down, but you can see yesterday was a swing high onto nothing. There was no structure to the left, and then the sellers came in, but then buyers did come back in towards the end, and now here you see the diversions even greater between there and there. So I'm reluctant to jump in either way at the moment on this, looking at the hour. And if we look at the 15 minutes, I get even more reluctant to jump in. So I'd want to see some structure built. You can see this here was not a decent retest of this level, and there's nothing, not even going to go to the left, but that was a really shoddy attempt at it. So I would expect either that to be tested again, so in other words this range to start, or if we are moving to the upside, then I would expect us to reclaim 34,490. Let's just call it 34,500, okay? So I'd expect us to get above 34,500, build a base there, and then that should get us moving to the upside. So for now, this is just confusion. And I don't trade confusion because it tends to hurt. So at the moment, that's kind of the plan of action, is wait for 3,500 to break, wait for supports up there. The lower time frame, you should see a crossover the moving average, you should see structure building, and then it's a nice small position tight stop loss for a move up, and expect the volatility here. It could move to the upside, could swing all the way down here and start forming a big range here as well. So there's a lot on the cards at the moment. But if I look at what's happening on the DAX and the S&P, it does look like there are flags forming, but it could also be just channels looking to move to push higher. And the lower time frames have already crossed over on the moving averages. So yeah, take everything you see with a pinch of salt, I think. It's either going to range or build structure. So it's building structure, let me put it that way, but which way that structure is being built for is anyone's guess at the moment. So we need to wait for breaks and confirmation before we take it. So breaks the upside, confirmation, then it's up. Breaks to the downside and confirmation, then it's down. Pretty much the moral of the story. Anyway, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.